If you've been looking up life insurance, you already know it's a mess. One person is like, IUL is a scam. Another person is like, whole life is a ripoff. Everybody's yelling and nobody's really explaining. So let me just tell you the truth straight up, because whole life and IUL can both be good. The problem is people are getting sold dreams instead of getting told facts, because everybody wants the same thing. They want safety. They want the stock market type growth. They want to pay like $30 a month for it. That doesn't exist. And if nobody tells you that, you're going to end up with a policy that looks good one day and falls apart later. And so in this video, I'm going to break it down in plain English. Okay, so we're going to talk about what whole life really is, what IUL really is, and who takes the risk, who gets hurt when things go left, and how people mess up trying to cheat the system. Okay, so forget about all the fancy words for a second. Whole life is like owning a house. It's stable, boring, but steady. It grows every year. It does what it's supposed to do. It's predictable. And the reason it's predictable is because the insurance company is taking on the ding risk, not you. Now the IUL is more like riding a wave. And when the market is doing good, you can do good. But when the market is flat, you're not going to really grow. And the part people don't understand is that even when the market is flat, the fees still come out. The cost of insurance still comes out. Everything still gets deducted. It's not about one being good or one being bad. It's about this. Do you want steady and guaranteed, or do you want the potential upside with more moving parts? That's the real difference. Now, this is where people get confused, like with whole life insurance, because the insurance company carries the risk. That's why the premium is higher. You're basically paying for peace when you think about it. You're paying for guaranteed growth, guaranteed cash value increase, a guaranteed foundation. So if the market crashes, you're not just sitting there stressed out about your policy. Now with the IUL, you carry a lot more risk. Yes. And they tell you, oh, it has 0% floor, meaning that you won't lose money like you would in the stock market. But here's the part that they skip. The 0% growth still isn't good when money is coming out every month for costs. So if the market stays flat for years, or if your policy charges go up as you get older, you could end up having either to pay more later. The policy starts eating itself. And I'm not saying that to scare you, but I'm just saying that people will get into an IUL thinking it's an easy win. And then 10 years later, they're like, why is my policy struggling? Because it has more variables. So whole life is more steady. IUL is more sensitive. Okay. So this is where I'm going to help you, because not everybody needs the same thing. Okay. So if you're married, you have kids, you got bills, mortgages, responsibility, and people rely on you, I'm going to be completely honest. You already have enough risk. You already have enough life things to deal with. You need something more solid, something more dependable. That's where properly structured whole life makes sense, because your foundation will be set. Okay. Now, if you're young, single, making good money, no kids counting on you, you have time. You can handle the ups and downs. That's when an IUL can make sense, because you have runway. So you can ride those waves and still be okay. Now, this is a part most people don't even know. A lot of people think that whole life means my money is locked up, or it grows too slow, or it's just for the death benefit. No, that's how people feel, because they've only seen traditional whole life designs. There's something called high value whole life. And that's the one where we design it for you, so you have more liquidity. You have more access to your cash, better function while you're alive. Now, this is how families build a personal banking system. This is how you can build an emergency fund that grows. This is how you can stop having to depend on credit cards and loans for everything. And no, you don't have to be rich to do it. You just have to do it the right way. Okay, listen. So this is the number one reason people end up with a policy that doesn't perform right. They want big results, but they fund it small. Everybody wants their policy to grow like crazy, but they want to pay the smallest premium possible. Like, that's like trying to carry a whole pool of water inside of a cereal bowl. It doesn't work. The policy is basically a bucket. The premium and death benefit determine how big that bucket is. If your bucket is tiny and you try to dump a lot of money into it, the IRS is like, yeah, I know. That's when it becomes a MEC. So a MEC is basically when your policy loses the tax advantages and now the withdrawals can get taxed and penalized. And we don't want that. So the moral of the story is stop trying to be cheap with your future. I'm not judging you because I get it. But trying to save money the wrong way usually costs you later. Okay? So at the Legacy Vault Financial, we don't just sell policies. We actually build plans. We build structure. We build vaults. Because most people think that you have to choose either safety or growth. But what if you didn't? There are certain riders and features we use that a lot of people don't even know about. Like, for an example, there are ways to get market-linked growth inside certain whole life designs with protection built in. So that way you're not just taking the same risk as an IUL, but you still have more earning potential than a basic whole life design. And the truth is, there isn't a one perfect policy for everybody. There's a perfect policy for your situation. So that's why we do custom blueprints. So if you want to see like what you personally qualify for, please just go to the legacyvaultfinancial.com and just fill out the legacy assessment, and then we'll map all the numbers out for you. And that way there's no guessing, there's no pressure. We just want to provide clarity for you and your family. Because at the end of the day, this whole conversation comes down to one word, and that's fit. Whole life isn't good or bad. IUL isn't good or bad. It's about what matches your goals and what matches your lifestyle. So if you already know what you want, but you want it designed correctly, just do the legacy assessment. It takes a few minutes. And if you're still like, oh, Kiara, I'm a little confused, I don't know where to start, that's okay. That's totally normal. That's why we created our financial foundation path, because some people need structure and not just a product. But either way, don't let anybody sell you a one-size-fits-all policy and you don't even know what you're getting, or you don't even know what you're paying for, because real wealth isn't built by shortcuts. It's built by design. Okay, so thank you guys for watching. The links are going to be posted below.